Good day, Junior Tickies. I'm Mrs. Brimacombe. We're going to look now at Chapter 11, Financial Statements and Analysis and Interpretation. Required, complete the statement of comprehensive income for the year ended 31 March 2023 and calculate the following indicators. They provided you with the trading account and the profit and loss account. So this activity is just going to focus on how to complete the income statement. What we've done to this point, you've learned about a pre-adjustment trial balance. Then we need to do adjustments. After we've done the adjustments, we complete the post-adjustment trial balance. Then we need to do all our closing transfers in our final accounts. So I want to illustrate through this activity how you can complete the statement of comprehensive income by using the trading account and the profit and loss account. So if we look now at the statement of comprehensive income, it will always consist out of our trading activity, which is sales minus cost of sales, our operating activity, then investing activity and financing activity. If we look at the trading activity, in other words, sales minus cost of sales, it means that we need to use the trading account. We start with the sales and always remember, debtors allowances must be closed off to sales. Do not show debtors allowances, which is an expense, as part of your operating expenses. That's your first closing transfer that you've learned. Debtors allowances is always closed off to sales. And then my sales is closed off to the trading account. This is the figure that should appear in your statement of comprehensive income. Minus cost of sales equals the gross profit. Looking at our operating income, it means that we need to look at the profit and loss account. But now you need to be very careful. Everything is included except for interest income. So any kind of interest that the business received must be excluded. That will go to note number 1, which is interest income. So if I need to now identify what will go into my statement of comprehensive income as my operating income, we've got fee income, commission income, discount received, rent income, bad debts recovered. Once we've listed all our operating income, we draw a block around it and we're going to total that. Gross profit plus operating income equals my gross operating income. Our next step is to look at our operating expenses, and everything is included except for interest expense. Interest expense, and when we talk about interest expense, we're talking about interest on bank overdraft, interest on overdue creditors, interest on loan. Those will form part of note number 2, which is your interest expense. So make sure that you exclude all of that. So the only things that we've got is bad debts, insurance, packing material, rent expense, stationery, salaries and wages, depreciation, trading stock deficit, and advertisement. Once we've listed all of them, we draw a block around it, and then we're going to total and work out what is our operating expenses. Make sure that it's indicated in brackets, because the next step, we have to take our gross operating income minus my operating expenses equals my operating profit. Completing note number 1 and note number 2. If we look at the profit and loss account and we need to identify our interest income, your interest income consists out of your interest on fixed deposit, interest on overdue debtors, interest on savings account. So these are the ones that were given in the profit and loss account. Then we need to total it. The total appears on the statement of comprehensive income. Interest expense, we had interest on loan and then interest on the bank overdraft. So my total interest expense is which will appear on the statement of comprehensive income. If they do not ask you to complete note number 1 and note number 2, then all of these calculations must be shown in brackets. Make sure you take the total that you've calculated in note number 1 and you transfer it correctly to the statement of comprehensive income. Operating profit plus interest income equals profit before interest expense. Then we need to put in brackets our interest expense. Make sure you take the total that you've calculated correctly to the statement of comprehensive income. Profit before interest expense minus interest expense equals net profit for the year. Now, before we're going to look at the analysis and interpretation part, we're just going to go through the profitability indicators. So when we're looking at the profitability indicators, after we've completed now the statement of comprehensive income and we would have completed the statement of financial position. So once we've done with that, we want to analyze and interpret our financial statements. Each and every owner of a business has certain questions that they need answers to. In other words, how profitable is the business? How well does it control its expenses? How does it compare with competitors? How do the current results compare to last year? Consider the local and international economy. Does it influence the current results? Did the business achieve their aimed markup? How does the cost of financing the business affect the profitability? And in the same way, how does investing affect the profitability of the business? So these are just some questions when we're looking at profitability. And the source that we use is the income statement or the statement of comprehensive income. There are other questions which the owner also would like answers to. And that's why we analyze and interpret the financial statements. And that we're going to look at a little bit later on when we do the statement of financial position. But when we're looking now at profitability, these are the financial indicators that we're looking at. Percentage gross profit on sales. In other words, another word for sales is turnover. Percentage gross profit on cost of sales. When we're looking at this financial indicator, we're always looking at, have we achieved our aimed markup or not? Because if we haven't achieved it, there are reasons why we didn't. And one reason could be too much trade discount was given to customers. So we're selling it for less than what we intended to. Percentage operating expenses on sales. Percentage operating profit on sales. Percentage net profit on sales. So make sure that you understand these financial indicators related to profitability. Now, please, you will be getting a formula sheet in an exam, but a formula sheet can only help you that far. You need to make sure that you study it and that you understand which questions fits in with which financial indicators. Otherwise, you're going to find it difficult to comment. So when we're looking at the profitability financial indicators, we're looking at our statement of comprehensive income. The first one that we want to calculate is our gross profit on sales. To calculate our gross profit on sales, we need to take our gross profit divided by sales, and we want the percentage. So it's always times 100, and your answer should be in percentage. So the gross profit on sales is 59.4%. Gross profit on cost of sales, have we achieved our aimed markup? So if I'm looking at my gross profit, it's 910,000 divided by 1.4 million. Again, your answer should be in percentage. This is equal to 65%. To give you an idea when we're commenting now on this, when we're looking at the gross profit on cost of sales, right in the beginning we said, we are provided with the information of Big Sky Traders for the year ended 31 March 2023. The business uses a markup of 70% on cost. So that is the aimed markup. And when I compare that with what we actually achieved, it means that we didn't achieve our aimed markup. And then we're going to look at, but why didn't we achieve our aimed markup? What is possible reasons for us not achieving it? And that is how you would comment on that. Our focus in this activity is just understanding how to calculate it. Later on, we're going to look at commenting. Number C, operating expenses on sales. To calculate that, we need to take our operating expenses divided by sales. Again, your answer should be in percentage. So if you get 36.99%, you can round it off to 37%. Number D, operating profit on sales is your operating profit divided by your sales times 100, because your answer should be in percentage. So that equals 28.7%. Number E, the net profit on sales. So to calculate our net profit, we have to take the net profit for the year divided by the sales. That equals 27.1%. So a person can conclude from here by if looking at the operating profit and the net profit that the cost of borrowing money did have an impact on our profitability. Thank you very much. Again, this activity is just a reminder, just basically an appetizer, just to indicate or to let you know, have a better understanding the format of the income statement. How does it work? Remember, it's after we've done adjustments. That is our final figures that will appear in your statement of comprehensive income. And then to have a better understanding of the profitability financial indicators. I want to leave you with this quote: don't let what you cannot do interfere with what you can do. Next, we're going to look at activity 2, where the focus will be on the statement of financial position and notes, as well as other financial indicators. Have a wonderful day.